It's important that you know that the vast majority of people are wrong about dividend stock investing. And it's important you know because it's going to impact how successful you are as an investor and as a retiree. Let me tell you what I'm talking about. A lot of folks in my industry would say you should be indifferent between a portfolio of dividend stocks and a portfolio of growth stocks. And their argument would be you can sell growth stocks to fund your living expenses. And if you have a portfolio of growth stocks that you've held for over 12 months, the positions that you've held over 12 months are going to be taxed as long-term capital gains, which is going to be very similar to how you're going to be taxed if you have a portfolio of dividend stocks, and the dividend payments, if they're qualified dividends, are going to be taxed at that same long-term capital gains rate. And it's outside of the scope of this video to talk about what a qualified dividend is, but know that most U.S. companies, but not all, pay out a qualified dividend. So that's an important difference. You want to look that up. I'll leave a link in the description. So the argument is you're indifferent. And because you're indifferent, and because growth stocks over an investment cycle tend to outperform dividend stocks, that you're better off with growth stocks, and that you can just, as I said earlier, just sell the growth stocks. But here's the flaw in the argument, and I've been a financial advisor for over 20 years. I've seen this play out. And so the theory is absolutely correct. The numbers are absolutely correct. The facts are absolutely correct. But what's not correct is how you as a human are going to react to scary market conditions. It feels very different when your portfolio is down 20% if your monthly cash flows from that portfolio are the same. It feels very different if you don't have to sell anything that's down in order to meet your monthly cash flows. Excuse me. So it's the psychological aspect, and this is critical. There's a third-party group called Dalbar that studies investor behavior. And while in theory and academically, we should all be doing well in making good choices within our investment options, our investment choices, what this third-party not-for-profit group found is investors, because of the psychological impact, do dramatically worse than what the stock market as a whole does, our investment decisions. And the reason for that is because when there's scary times like the financial crisis, 2008, 2009, or the start of COVID, we tend to move away from things that are scary, right? Fidelity, which manages and custodies a lot of 401k assets in America, they did a study and shared just how much money moved out of the stock market and into the bond market precisely at the wrong time, during the market lows of 2008, 2009, during the initial very scary days of COVID when the market had its fastest drop in U.S. history, right? So this psychological aspect is critically important. And that's what I'm talking about with dividend stocks. Yes, the critics are correct. You should be indifferent, but you know what? You're not indifferent between selling stocks and having cash flows. As I'm riding in this canal here with my wife Linda. Say hello, Linda.
Hello, Linda.
Okay, that's the first time she's appeared in one of my videos, but she's doing the hard work. We're on a paddle boat here. My legs are kicked up here, and Linda's legs are hard at work powering us our green journey through this canal. But let me get back to topic. You know, this trip that Linda and I are on is paid for with cash flows, right? And right now my cash flow comes from my job, and Linda retired almost 2 years ago now. But it's nice, you know, let's say the stock market was scary right now. I don't have to sell any stocks to pay for a nice trip like this. We just use the cash flows off of my job. And you want to set yourself up in a familiar and a comfortable way in retirement. And for me, that means, replacing the look and feel of that monthly, that quarterly, that annual income that you had earlier. And so if you have, let's say, rental income from a rental property, if you have interest payments coming in from maybe bond investments, if you have cash flows coming in from your dividend stock portfolio, that is a very comfortable situation. And even if the stock market is down, you still have those cash flows coming in. Now, it's critically important which stocks you have exposure to for dividend stocks, because there tends to be two types of dividend stocks. The first is what I call financial engineering companies. They're borrowing money to basically pay out to their shareholders. I don't like those kind of companies. I like companies that have solid businesses. They're operationally excellent. They have strong competitive moats, and they're sharing their cash flows that they're generating as a business with their investors. So some companies keep all of their profits and use it to fund future expansion. And that's great. Some great companies were built that way, including Apple. Apple Computers, which for many, many years did not pay a dividend. Now it does pay a dividend. This is not a market call. I'm not suggesting that stock. This is not financial advice. I'm just giving an example of companies that keep all of their profits so that they can grow, and that's great. But then there's also companies, I'm again going to mention another name. This is not a stock call. Coca-Cola, right? Coca-Cola has been around for a long, long time. The economy has to get really bad before people quit paying $1 for a can of Diet Coke. So those types of companies are likely going to continue their dividends. There's no guarantees of that, but those types of companies are going to continue their dividends, so you can continue doing fun things like this regardless of what the market is doing. And I think that's the power of dividend stocks. So am I naive and I don't understand the math of dividend stocks? Of course not. I do. I've been a financial advisor for over 20 years. I've got a bunch of credentials behind me. But what's really important is the wisdom that comes from working with hundreds of families over more than 2 decades and being able to share how do we react as human beings. And I also want to share with you, related to how we react as human beings, is this video here, which is 5 reasons to retire as soon as you can and to be able to do more stuff like this in your future and enjoy your life while you're still in the youth of your senior years. This video here, 5 reasons to retire as soon as you can. Thanks for watching this video. Bye-bye.